Good morning everyone and welcome to Morning Markets on Thursday the 4th of May. Today we're going to focus on the US, mainly the Federal Reserve meeting yesterday evening, the consequences from that, but we're also going to focus in on wider issues within the US banking system in the context of a US economy which is still growing. So we had the May meeting of the US Federal Reserve yesterday evening, no surprise with a quarter point increase, taking the policy rate to 5.25%. And more importantly, the guidance from both the committee and the chairman was somewhat more dovish. They're acute to the tightening in credit conditions as a result of the banking failures since March. And that takes us on to the latest issue within the regional banking sector for the US, this time PacWest. This story dominated markets in the so-called after-hours session, with the PacWest share price falling 50%. And these issues for PacWest are largely similar to Silicon Valley Bank in early March. The bank is exposed to high net worth clients within the venture capital sector, but it has used those deposits from those clients to give the majority of its asset book in real estate loans. And investors are already forecasting credit losses in that loan book when those loans come to maturity. And so the share price is under pressure, and PacWest announced that they are looking to an external solution. They are likely to require external capital or will just sell the bank completely to a private investor. So there are still stresses within the wider regional bank sector as these issues from higher interest rates and tightening credit feed on itself and will likely lead to other pressures for regional banks across the US. However, more optimistically, we had the latest survey data for the economy-wide across the US for the services industry. And the data there was more encouragement. So we saw the new orders book for the services industry expand to the highest level in 3 months. But just as we were expecting, we saw the employment indicator cool again. And that really backs up what we're seeing from some more regional surveys, which is that the economy in the US is slowing, although it's still growing. And that means that we're likely to see less employment going forward, cooler employment numbers, and we may even see a tick up in the unemployment rate simply because that the employment pool is expanding quicker than potential employees are entering the jobs market. So, in summary, the Fed are now more cautious. They've likely indicated that they will pause over the summer to see the impact of credit conditions upon the economy. There is likely to be an external solution required for PacWest. It's a very small bank, but it's still a headache for regulators in the US, but the economy remains in rude health and continues to grow. Please join us tomorrow, where we will focus more on Europe, and we have the ECB meeting today, and colleagues will update you on the outcomes from that. Thank you.